Hello everybody and welcome back to another episode of the Red Jacket Lawyers advice on German and company law. Today we'll do the second video in our series of short videos on the UG, the entrepreneurial company in Germany, and we'll focus on liability, capital and reserves. If you see in the previous video, you will realize that the UG may quickly look like a bargain to entrepreneurs and startup business people. It requires minimum share capital and offers the same limited liability shield as a fully fledged GmbH. But in practice, many founders find that the perceived undercapitalization leads to very real risks and hidden obligations. So today's idea is to make you aware of this. So let's briefly speak about capitalization. By law, and I specifically refer to paragraph 5a of the GmbH law, a UG must allocate at least 25% of each year's profit to a statutory reserve, and it needs to do so until the total share capital and reserve reach 25,000 euros. That, of course, is the sum that a GmbH needs from the outset. The rule thus, to a certain extent, prevents profit distribution in early years and can make businesses less attractive to investors or partners. For example, if a UG earns 2,000 euros annually, it will take over a decade to accumulate sufficient reserves to become a GmbH. And I know 2,000 annually as an annual profit isn't very much, but it serves purely for exemplary purposes. The idea is to encourage reinvestment and the gradual strengthening of the company, but in practice, many UGs remain small and thinly capitalized for years. That's just a note. So, number 2, let's talk about liability and risks. Shareholders, as I've pointed out, enjoy limited liability. However, often the shareholders are also the directors, and they can easily fall into the personal liability pitfall by ignoring the financial distress the company is probably in. They can also run into trouble by delaying filing for insolvency under Article 15 of the German Insolvency Act, and that's quite a common trap. So don't use your company funds for private expenses either. Doing so would mean a breach of fiduciary duties and can again trigger personal claims against you under Section 43 of the German GmbH law. And moreover, creditors and banks often treat UGs with a degree of skepticism. Without proper equity cushion, they may demand personal guarantees or higher interest rates. And the latter will obviously impact on the company's profitability, and personal guarantees will of course be a way for the bank to get around the limited liability shield the company actually provides. Next, as part 3 of this video, I would briefly like to focus on capital maintenance and economic reality. The capital maintenance rules under Section 30 of the German GmbH Act equally apply to entrepreneurial companies, and it's effectively forbidden to have distributions that reduce the net assets below the share capital. Founders often misunderstand that provision, thinking that they can completely freely use the company account. But such misuse can lead to the elimination of limited liability protection and end up in liability for breach of fiduciary duties. Last but not least, we have to have proper bookkeeping, keep a clear separation of the funds and early financial discipline is a real essential element to running the company properly, because sorting things at a later stage is always expensive, is always difficult, and is always prone to go wrong, causing liability. So, in closing for today's video, the message is running a UG responsibly means more than just having the paperwork right. It's about sound management, it's about transparent accounting, and it's about understanding your obligations as a director. It doesn't make a difference whether you run a GmbH or a UG. Now, view ahead. In our final video on the UG, we will see how to convert a UG into a full GmbH once it's grown sufficiently, and what alternatives might make sense. So we hope you're looking forward to that as well. And if you have comments on today's video or questions or anything you would like us to address, please let us know.